Let's go into the type of sources of capital. So let's start off with the most basic, bootstrapping. We all have sources of capital. And when I hear the business owner, potential business owner that says, well, I would have done this business, but I don't have the money to, my very first reaction is always, this isn't a person that's dedicated enough to the business idea. We all have credit cards. We all probably can find a way to be saving more money than we're saving right now. We all have access to capital in creative ways of our own that we can get our hands on. The real question is it worth it? Is it worth it do you want to give up the dinners that you go to and the things that you buy for your family and stressing out about whether or not you can pay your mortgage payment? And those are totally fair, fine questions. But it doesn't mean you don't have the money. What I've typically found is that people find the money for the things that they really want. People find a way to get the money for the things that are most important to them. And if that's going out and having a good time, or saving for their family, or buying a house, or starting a business, people find a way to get the money they need to do the things that they want to do most. The next source that you'll typically get is, so there's this seed round. And so for a business like a salon, or for trying to get that first at $10,000 to $50,000, people will talk about a seed round or a friends and family round. And this is where you go to people in your close circle, and maybe you ask them for $1,000 or $5,000 or $25,000 or $50,000 for your business. My general rule is don't raise money from people that if they lost it, they would really give much more than a second thought to it. Don't go raise $15,000 from your aunt or uncle if that $15,000 is their rainy day fund from their mortgage. It's not going to help your business ultimately, and it certainly won't help them. Now, sometimes you'll have somebody in your family, certainly probably your parents or your siblings, that just believe in you so much. They'll say, take it. I want you to pursue it. I want you to carry on your dream. And that's a very common way that a lot of us are going to get our businesses off the ground. And those situations are probably a little different. You need to make your own calculus whether you want to do it or not. But don't go out to your extended friends and family as a general rule and ask for money that if for any reason it got lost, it's going to put that person in any kind of financial hardship. It's going to put a kind of pressure on you that is unhealthy for growing your business, and there are probably other better sources of capital where you could find it. So in my case, for the angel investors that were investing in our company, a $25,000 or $50,000 or even a $100,000 investment, if they lost it, wasn't in any meaningful way going to change their lifestyle, and they were doing those kinds of investments across multiple kinds of companies. For trying to get money from a bank, you're usually going to need to have a long history of revenues coming in or personal collateral. It is almost impossible to get any meaningful kind of loan from a bank unless you've got a long history with that bank established already, or you've got some kind of personal or business assets that they can collateralize the loan against, which is another good reason to try to form a relationship with a bank early and often, and even start off with a small line of credit that you use and you show you can repay. The more credit that you use and you show that you're repaying, the more options. And there may be a very simple basic business loan, right? A line of credit for $10,000 that really is no different than a credit card, but simply by using it and paying it back, a year or two in, you may be able to up that to $20,000, $30,000, $40,000, $50,000 line of credit, a revolving line of credit. And certainly if you've got any receivables, another thing that you can do with the bank is you can show contracts that you have for payments that are going to be made for services or products to be rendered, and you can use that to leverage and get bank loans as well too. The next category of investor that you may find is an angel investor. And this is typically an individual that has had some success either in your industry or in business in general, or just has money, and they're trying to diversify their investment portfolio. And instead of investing just in things like stocks and bonds and real estate, they're willing to invest in businesses, whether they be more traditional businesses or high growth businesses. And typically, angel investors not always, but typically angel investors realize that the investments that they make in new businesses are high risk, high reward, and that there's a large chance that they may not get that investment back, and they're willing to put a certain percentage of their money into those investments. Now, even among angel investing, there's really two kinds of types of businesses. There are lifestyle businesses, like Nikki's salon or a restaurant, where they're probably going to be expecting, well, there's risk, but I'm expecting there's probably at least a 50% chance that I'm at least going to get my money back in the next year or two, and then I'm hoping to get a dividend. After that, that's something that I could beat in the market, like for a stock and bond or for a piece of real estate I buy. And then there are angel investors that are going to invest in a website or a web product or something that's going to be based upon a liquidity event. And they're going to realize, hey, maybe it's a 1 in 10 chance I ever get my money back. But if I do, I'm looking for a 20, 30 times return on what I originally invested. And most typically, people that are doing angel investing are investing in people. And where do you go to find angel investors? They're all over the place. It's any successful person that's had a track record of doing previous angel investment. You can find folks that do angel investing on sites like Crunchbase, which has a list of angel investors. There's Angel List, which is specifically meant to list your business on and then attract investment from the angel community. You talk to people that in similar kinds of businesses got investors, and you say, hey, where did you get your investors? And you try to get introductions to those people. So if you're trying to start a restaurant business and you want to get restaurant investors, go talk to 20 people that have started a restaurant business and took in limited partners and see who those groups of people are. And if you're in opening a restaurant, go pitch them your idea and get introductions to talk to them about what you're working on. If you're starting an internet business, talk to someone that started an internet business and got those kinds of investors. But the key thing is that the angel investor is really making a bet on you as an individual. And the other hard part is that for example, I can't just tell my angel investors, hey, go invest in your business, because they're not investing in the business idea so much as the person. An angel investment really is very much based upon a relationship that you have with that person, where they have got an amount of trust and credibility about you as a business owner or operator, and they're willing to use that trust or credibility to give you their money to launch your business. And then the final category are venture capitalists. And venture capitalists are professional money managers. They raise money from limited partners, folks like pension funds and universities and large institutions and large private family holdings. And they'll put together a fund of $50, $100 million, $200 million. And then they'll invest in multiple companies. And in those cases, they're almost always going for a liquidity event, and they're investing in high growth companies. So how do you know if your business would be a fit for venture capital? You know your business would be a fit for venture capital if it's similar to other venture capital-based businesses. If you think that you could scale to $100 million or plus in revenue in, let's say, 7 or less years. If you think that you could sell their company for $1 billion, right? That's the kind of rule of thumb of what a venture capital is looking for. They're having a high growth opportunity, invest in companies that have the potential to get to be billion-dollar companies, companies that touch millions of users, could get thousands of paying customers in a relatively short period of time, and need that large infusion of capital to see growth. It probably would have been hard to get Docstoc to the point it was at today, just if I had to do it on a profitable basis. But with $4 million of capital up front, we were able to scale it to the point that it's getting the kind of metrics that it's getting today. But the key for all of them, it's the same 5 Ps that they're all looking to see. They all need to see it. It's just a different style of pitching for each of them.